70% of all gold production in the U.S. comes from a single state, Nevada. Conventional wisdom says that all the good deposits have been found. But one geologist who's discovered more than 30 million ounces of gold says he knows where to find Nevada's missing gold. And right now, he may be on the verge of being proven right. Investors and speculators can learn more at futuremoneytrends.com/gold. Greetings and thank you for joining me at futuremoneytrends.com. I have a special guest with us today. He's been a good friend of the show and is without a doubt one of the most popular guests we have. If you're interested in talking about the global economy, what's going on behind the scenes, and what he sees for 2016, this is the interview. Andy Hoffman is the marketing director at milesfranklin.com. It's a bullion dealer. They've been around since the early 90s. Very safe company, and every time you go to Sprott, even though there's a Sprott money, they tell you to go to Miles Franklin. So I'm very thankful to have Andy as a friend and have him on the show today. Andy, thank you so much for joining us.
Always a pleasure. I'll still never forget the day that I ran into you at that San Francisco conference back in 2010 or so, and I recognized you from your podcast. It was such a thrill. And I'm so glad that we've become good friends and crusaders for truth over the years.
Well, those were the glory days too, because I mean, we had, everything was going exactly as forecasted as far as the economy, and then silver and gold were running. I mean, it really was, the glory days for precious metal investors. Although I have a feeling that was just a taste of it, just a small scratching the surface of what's to come. Real quickly, before we get into the show, people have a chance to meet you if they're in the Denver area Thursday, January 28th. Can you tell us how can people sign up to meet you?
Yes, myself and Andrew Sheckman, who's Miles Franklin's co-founder and president, and he knows as much about the bullion industry as I do about the global economy. We're going to be doing a series of free dinners around the country. The first one will be here in Denver, where I live. It's Thursday, the 28th, 6:30 p.m. All you have to do is email me at ahoffman@milesfranklin.com, and we'll get you down there. It's going to be a fun event. You're going to learn a lot. It's all Q&A. It could go on for 3 or 4 hours, all Q&A, and trust me, there'll be plenty of Q.
I so wish I could be there. Hopefully you'll do one in Texas, because I can't imagine a better evening than just sitting around with a group of people having a nice meal, talking about precious metals, liberty, and of course, everybody should know Andy Hoffman and Andy Sheckman. I mean, they're traveling all over the country, so they're talking to not just people focused on precious metals, but all sorts of investments, and they're seeing and witnessing what's really going on behind the scenes. And they're talking to some large hedge fund managers. So definitely, you want to be there. You want to be with them, especially right now in 2016, because it looks like things are unraveling. So that's Thursday, the 28th. And again, where do they go, Andy?
Hoffman@milesfranklin.com. Just send me an email, and space permitting, you're in.
Awesome. Well, hey, let's start off. We're about 2 weeks into the year, just over 2 weeks. Is this is this it? I mean, it seems to be unraveling. I mean, all these fake things that have held this whole economy together. The U.S. stock market was the only thing it had going, and now it all seems to be melting away.
Well, you talk about the glory days, for the sector. And that probably goes back even further to the late to mid 2000s when you had the best of the best. But when it comes to the price of gold and silver, again, we're talking about dollar-priced gold and silver, not what it's priced in other currencies where it's doing much better. 2011 is when let's call them powers that be, realized that they were losing. They were 3 years into their post-2008 money printing frenzy, and they were failing. Europe was failing. The U.S. was stripped of its AAA credit rating. That, by the way, when it had $5 trillion less debt than it does today. And all the markets were falling apart, and they're worried about Greece and all this. And that's when they realized, holy cow, we got to just knock the hell out of gold and silver, because it's been up 11 years in a row, and it's literally going to destroy us any day. And so they pushed and they pushed, and I called that the point of no return. In an article back then. In fact, I wrote the Eastern point of no return last year. I said when China clearly was doing the same thing, using the same algorithms, because they realized, too, that they were at the end of their rope. And as you said now, everything's falling apart except for they got the Dow. Yes, I wrote an article a year or two ago called Last to Go, meaning they had lost control of everything. There's nothing that the powers that be haven't lost control of except the Dow Jones Propaganda Average and related major stock averages, and paper gold and silver. I mean, they've clearly been losing physical gold and silver because we have record demand, we have collapsing supply, and money printing is going off the charts. So these things are really starting to get out of their control. The inventories are vanishing everywhere. And then, of course, you have stock markets around the world are falling. And now the stock market itself here in the United States has been falling. And when you talk about commodities and currencies and everything else, I mean, we're talking about the worst economy of our lifetimes, of our parents' lifetimes, of our grandparents' lifetimes. And it's only going to get worse right now. I mean, people don't realize the global economy now is ground to a halt. I mean, last week there was not a single cargo ship on the entire Atlantic Ocean. The Baltic Dry Index is at an all-time low. The CRB Commodity Index, 40-year low. Pretty much every currency in the world, and I literally mean every currency in the world, is at or near its all-time low. In some cases, way below those all-time lows. I refer to, for instance, remember the Russian ruble crisis that almost took down the world in 1998? When the ruble went from 7 to the dollar to 21 to the dollar? Well, today it's 80 to the dollar. The Mexican peso crisis, the tequila crisis of the mid-1990s, they thought that was going to take the world down. That was when the peso was 5 to the dollar. Today it's 18 to the dollar and plunging. So again, we're talking about everything is falling apart everywhere. And all they have had left are these few markets like the Dow and gold and silver. And, you know, they've lost control of even the stock market is starting to fall. The Dow most stocks are in a bear market over here, and pretty soon the Dow itself will be. And as for physical gold and silver, I think you're going to see the perfect storm of physical supply and demand this year, and something is going to cause that to all happen sometime in the near future.
Andy, in your previous life on Wall Street, you were an oil analyst. Oil is at $28 a barrel or so, right about as we do this interview, $29. How low can oil go? Do you see it go? I mean, there are some predictions out there, like from Mike Maloney. He's been calling for it to go to $10 for a long time, and it's certainly on the right track to get the $10. What are your thoughts on oil right now?
Well, you know, I saw, and actually yesterday my article was called Harry Dent, Mike Maloney, and Miles Franklin, because I was saying, for all the talk about, you know, Harry Dent and what he says about gold and silver, not even worth the discussion right now. We all agree, as Mike calls it, this is the worst crisis that humanity will ever see, not just because of financial, but because of the ramifications of what it's going to have on the 7 billion people around the world. And we all agree. I mean, no one more than me has been more on the, quote, deflation boat than me. Deflation, to me, is good for gold. But my point is, I believe that the historic oversupply that I wrote about in last year's direst prediction of all, which basically comes from David Stockman's fantastic research in his Great Deformation book, says we've had 3+ decades of unfettered money printing, Wall Street financial engineering. And of course, in the case of oil, this new technology that has caused a lot. I mean, shale was not around when I left Wall Street. I was an oil analyst. I left in 2005. This shale wasn't even on the screen yet. And now it's a technology that's going to cause supply to come onto the market indefinitely. So, you know, you combine the forces of deflation with the new technology and all the debt that's out there, that these companies are all going to be going bankrupt. So, and sovereign nations, so they all need as much cash as possible. So they're all going to accelerate the amount of oil producing, like Iran, for instance, which is going to add another 1 million barrels a day to the market. And, you know, could you see $10 a barrel? Sure. I mean, my only caveat is when hyperinflation comes to town and nominally speaking takes prices up, even if in real terms it doesn't help them at all, because there's not a doubt that commodity prices can go to lows that we haven't seen in a long, long time. For instance, when I was on Wall Street, I worked at Solomon Smith Barney. Basically from 95 to 2005, the price of oil was between $10 and $25 the whole time. The world, yes, it's changed, but it hasn't changed that much in 10 years, aside from the shale, which has added all this supply on. So could we have $10? Sure, we could have $10. I mean, we haven't even had the real crisis yet. For instance, when the Dow starts really falling and people are really in 2008 crisis mode and really start selling everything that's not nailed down. And then when you have the Glencores of the world that are starting to sell all of their paper to pay off their debts, et cetera. So sure, you could have $10 a barrel. You could easily have $1 per pound copper. I mean, there's no need for it. There's supply everywhere. There's no demand. I mean, people don't realize, you asked about my oil expertise. if you look at a chart of oil going back since the beginning of when there was oil, like, 150 years ago, the demand never drops. I mean, because of population growth, industrial growth, I mean, it never, ever drops. Even in 2008, you could barely even see the blip on the screen when it slowed down. So if you have a drop in demand, which I really believe is in the cards, you could easily see $10 copper. You could see another huge drop in the commodity index, and you could see just tens of hundreds of thousands of companies go bankrupt.
Now, I do see a lot of headlines about the 2008 and is this a Lehman Brothers moment? But, there is some big differences in the sense in current pricing. Oil was over $100 in 2008. And then it crashed down to the 30s. And same thing for all these commodities. I mean, the commodities index right now, at the start of this crash in 2016, they're already starting at like all-time lows or generational lows. So, do you think this is going to be a huge deflationary shock to the system? Essentially, basically 30, 40 years of this credit expansion, or blowing up in 1 year? Or is this going to be like, the last 5 years where the economy has seen a slow motion collapse, slowly but surely, things get worse, ignoring the markets, of course, set aside? Or is this going to be something really quick, like the Lehman Brothers moment?
Well, it has been very quick in a lot of countries. And again, secular Americans don't look at the other 6.9 billion people in the world. I mean, people are suffering and starving and at war around the world right now, and we are just getting started. I mean, again, the average currency is down. If you had to pick a percentage, it's probably down 50% or more just in the last 5 years. And you talk about all the money printing. We're saying, all these years of money printing and financial engineering. I mean, just since 2008, I saw an article the other day. It said that just the publicly traded U.S. and Canadian oil companies, that's it, just U.S. and Canada, publicly traded, going back to 2010, not 2008, 2010. So 2010 to 2015, which was basically amazing times for oil with the exception of the last year. This group of 80 companies saw its long-term debt rise from 180 billion to 360 billion in 5 years of good times. And so you see how much, when you say, well, where are we going to start from now? Well, we're starting from care of all that money printing and financial engineering. We're starting at the worst debt level of all time. And back in 2008, the currencies hadn't yet fallen. Here we're starting with all the commodity currencies already at all-time lows. And I'm not just talking about third world currency. I'm talking about the Canadian currency, the Australian currency, the Mexican currency. These are first world nations that are experiencing this, let alone, I mean, every day you're seeing the depegging and the devaluation. We saw it in Nigeria last week, largest country in Africa, and Angola and Kazakhstan, Argentina and Venezuela. These are official devaluations. And, per what we saw when the Chinese lost control of the offshore yuan market a couple of weeks ago, all the markets are going to start popping up, having black market currency rates that are going to eventually be found either officially or unofficially. So I believe that, we're starting from the worst imaginable position, and we're starting from much worse fundamentals. Again, people think of 2008 like it was the worst of times. No, 2008, as you said, we were coming off the best of times, especially if you're talking about commodities. The commodity index peaked right before the whole crisis. I mean, oil was $150 a barrel in 2008. These were very strong, healthy companies with very little debt. And the shale business really wasn't even a big deal yet. So again, 2008 was a shock to the financial system, but economically, it really wasn't that big of a deal. The big deal has been the ramifications of the 2008 crisis, which have reverberated throughout the years and added on to exponentially by all the money printing and financial engineering and market manipulation. So, to me, I don't think that there's ever been a time in history or ever will be a time in history where we're this vulnerable to complete collapse. And I mean complete, because it's going to be worldwide. And again, it's already started. It's not like, oh, we're waiting. If you live just about anywhere right now, you've seen your currency collapse. I'm talking about Europe, Japan, big places, and civil war is on the rise everywhere. Secessions, the kind of things that eventually will get to the United States.
Andy, the physical coin demand, it's keeps hitting records. It's surging. However, I've been to several of these gold shows and investment conferences. that audience is dead. As you know, some of the shows were even canceled indefinitely. Many of the other shows, I mean, they've gone from having, 300-400 mining booths to like 20 companies showing up. It's really pathetic and sad to see how this bear market has just destroyed this sector. However, that physical demand just keeps going up. Where is the physical demand for coins coming from? Is it coming from the retail investor? Because it's hard to make that connection when the retail investor has completely abandoned the natural resource sector. But here we see coins, the demand just keeps going up.
Right. And as you know, I worked in the mining sector for many years and investor relations for them. And, the biggest problem with it is simply what the cartel has wrought. I mean, the cartel cannot destroy gold and silver. And in fact, all they can do to it is make it more scarce. And that's exactly what they've done with all their naked shorting. They've destroyed a sector. And yes, there will be strong companies that will survive. But the point is that generally speaking, there's been no capex in the sector for years. There's been no discoveries for years. The people are leaving. The debt needs to be repaid. And the write-offs are coming in the next couple of weeks. So, no matter what happens, gold and silver supply have peaked. There's no doubt they've peaked. They are coming down hard. Silver actually was down in 2015, and people should definitely listen to Miles Franklin's 2016 Silver Outlook webinar that we're holding on the 27th. It'll be up on the internet. It's with David Morgan and Chris Marchese of silverinvestor.com, where we're going to update the Miles Franklin Silver webinar from 2 years ago, and it's going to be bloody. You're going to see dramatic drops in supply. We've seen the inventories drop dramatically around the world. And of course, we had that major silver shortage last summer. That one between July and September was the worst shortage we've had. And we've had several since 2008. And of course, now that we have a real crisis coming on our hands, I wouldn't be surprised if another one crops up soon. But you say, the demand for physical coins, it's such an interesting market because a lot of these countries around the world right now, I mean, most of them, they're seeing their currencies collapse, and yet they can't buy precious metals. South America, there's no coin dealers. It's very hard. We can't even, at Miles Franklin, we can't even ship to most of South America because the insurers won't take it. So a lot of the world is being destroyed, and they can't get gold and silver if they want to. And in Europe, of course, it's getting more difficult with these horrendous VAT taxes and all kinds of things that make it very, very difficult. India, the import taxes, now they're trying to make the people give it up. So it's not as easy to get as it is here in general. The problem is, as you say, people just don't care. I mean, it is beyond belief with what's going on in the world. The fact is gold is hitting highs or near highs in many currencies, and the whole world's falling apart. And still, people are as complacent here as I've ever seen them, with the exception of, say, last summer with silver, where people were going berserk because there was a shortage. But generally speaking, yeah, the mint, the U.S. mint, the Canadian mint, these are the biggest sellers of retail coins. They hit records in 2013 and 2014, 14 and 15. And by the way, January so far is on a pace for the biggest year ever for both gold and silver demand from the U.S. mint just in the first few weeks alone. But you know what? It's not Americans and Canadians that are buying it. I have always believed that this is foreigners that are taking the supply out, because my experience at Miles Franklin in the last few years has been that, generally speaking, it is pulling teeth, getting people to listen. And it's not like gold has done much in the last year or two. People are just waiting, as they did when things were going up, 5 years ago, for it to go up. To them, it's to almost everyone, it's an investment. And once it goes up, they want it. And they don't realize it's insurance. And it's the kind of insurance that not only is at historically cheap levels now, but will be gone in an instant and won't even be buyable when you need it. So, we struggle along, and with our business model, it's very strong. So, we hang in there, but we're waiting for the Americans and the Canadians to come back en masse, because there's been no new buyers in this continent for years now.
Yeah. So just so people understand, this record-breaking demand and then this huge demand for physical bullion and coins, this is not coming from the general public. This is coming from...
And again, 2015, unequivocally, aside from it being the highest ever U.S. Mint and Royal Canadian Mint silver demand, on a worldwide basis was the highest ever gold and silver demand. I mean, by far. I mean, the numbers out of China are astounding. The Shanghai exchange withdrawals alone were almost as much as all of global production, which shows you that obviously whatever inventories are left, let's say at the U.S. Treasury or wherever else they're hiding at the GLD and is rapidly being taken behind the scenes. I mean, look at the COMEX inventories of gold and silver. They're plummeting to almost nothing. There's literally almost nothing left. So again, there is record demand around the world. There is not record bullion demand by Americans, that's for sure. But still, the U.S. and Canadian mints had record years for silver sales. So I think it's only a matter of time as this crisis unfolds that the American and Canadians and whatever other Westerners are still praying at the altar of central banks start to realize that they too are going to lose their purchasing power if they don't start protecting their life savings with something that's worth something.
Does 2015? I know we don't have the numbers in yet, but certainly 2016. Do you expect to see a supply contraction, a significant one, especially in silver? Because I've seen some of the numbers year over year. U.S., Mexico, Australia, Canada. I mean, some of these countries are posting big numbers. Down.
I mean, again, I encourage everyone to just Google Miles Franklin All-Star Silver Webinar. It was done in October 2014. It was with myself, David Morgan, Steve St. Angelo, Bill Holter, and Harvey Argan. And we talked about all these issues. And we said it back when, I remember I wrote it down the other day, copper was $3 a pound and zinc and lead were $1 a pound and silver was $17 an ounce. We were saying we could conceivably at these prices see a big contraction. And then we said, you know what, if things keep going in this direction, we could see a 25 or 50% drop in silver prices, in silver supply, I should say, in the coming years. And look where we are today. So, and all these analysts said silver production will never stop going up. Well, guess what? It looks like it was down 5 or 10% last year. And, Steve St. Angelo, who I think is one of the best analysts in this business, he just wrote to me the other day and said, I think you're right. I think we may see a cliff dive in production. And I really do believe, especially because close to 2/3 of all the production is copper, lead, and zinc mines. And we're talking about you can't have more oversupplied commodities in the world than those. So yeah, we could easily see a 20, 30, 40% drop in silver supply over the coming years. And nothing's going to change it. I mean, nothing's going to change it. The primary silver miners haven't made any significant discoveries in years. The only potential supply out there are projects that are way, way beyond development. They're so expensive and they haven't even been permitted. And a lot of them are base metal mines that don't even have a chance of getting developed. So I think you're going to see the perfect storm. Again, I wrote last week my audio blog, a couple of days ago, called Commodity Life and Death, A Tale of Two Markets. And it's just reiterating something I've been talking about back from an article I wrote called Supply Response, saying, for anyone who actually believes that gold and silver are just commodities, look at the supply demand, and platinum for that matter too. You're seeing platinum, you can't even get a coin right now, and supply has dropped off a cliff, and it's going to keep falling. And the same gold and silver, supplies are tight, and demand is soaring. But all the other commodities, from oil to even agricultural commodities, if you could believe it, are oversupplied and underdemanded. And that's the difference. That's why gold and silver are money. And that's, by the way, what the cartel has wrought. So, you're going to see these perfect supply-demand messes in the coming years in both the commodity side and the actual monetary metal side. And, to me, people ask when. I say, I don't know when, but I just can't see the 2016 passing by without something truly cataclysmic happening.
It is an amazing setup, too, specifically for the metals, because what you just said is the other commodities, they're seeing falling prices, but they're also seeing falling demand. Here with the precious metals, you have falling prices, but you're seeing demand go through the roof. And now supply is in a situation where the supply could collapse, which this is the perfect storm for precious metal investors, because you have a supply and demand story that's better than ever. And then underlying that whole thing is the global economy, which, man, people think demand is high now. Wait till this thing really cracks wide open.
Yeah, I mean, QE to infinity is just getting started. The currency wars are just getting started. The Chinese devaluation, which I predicted, and many others are just, there's been 3 or 4 official devaluations in the last month alone. Jim Rickards last night had his big Agora presentation, emergency thing, talking about how the Saudi rial is going to depeg any day, which of course it's going to. Saudi is about to go bankrupt, and they'll be followed by everyone else. And don't forget, as the dollar surges and surges and surges, it just makes our economy that much weaker because all these multinational companies have all their sales overseas. So that's going to put more pressure on Janet Yellen to do the Yellen reversal and do QE. Heck, the other day, I think it was Wednesday, not even Friday when the Dow was down, but just Wednesday, the White House had a press conference saying how alarming the fall in stock prices was, and they were watching it. The White House is scared of falling stock prices. They're scared of a strong dollar. Everyone is scared of a strong dollar. And so there is just too many reasons why we are going to join or I should say rejoin the QE party sometime likely this year. And when we do, as I call it, the Yellen reversal, that's when I say, if you haven't bought your gold and silver, then it's going to be too late. Because once the Fed has to admit that they were wrong, and they have been beyond wrong, it's going to be all over for the gold cartel, in my opinion.
You know, and there's so many evil forces out there too. I mean, if you're a dictator of an oil nation and you're about to be overthrown because the oil price is too low, or on the flip side, if you're a big billionaire and you're running an oil fund or an oil company, I don't put it past any of these people. It's just like John Perkins, the economic hitman. I don't put it past any of these people to stage some type of terrorist attack or even to push countries into a war to get the oil price up.
Well, I'm not going to speak about the whole false flag thing, but the fact is you're completely right. I wrote last year, crashing oil, and that was when oil was $80 a barrel. Crashing oil prices portend unspeakable horrors, and not just crashing oil prices, crashing commodity prices, crashing economic activity of all kinds. I mean, my God, the president of France today, he said France is in an economic emergency. You imagine? I mean, last week Obama's given his State of the Union saying everything is amazing, and if you say otherwise, you're peddling fiction. Can you imagine if he said the United States economy is an economic emergency? I mean, this is the thing that wars are started over: social unrest, the wars that are breaking out in the Middle East over who knows what, oil, territorial. I don't know, the need for power. I don't know, but the thing is, every time you have economic crashes, you have wars, and whether they are by false flag or by spontaneous combustion or by evil people looking to make money from it, they are going to expand. There's no doubt about it, and no one is bigger and better at war than we are.
All right, Andy Hoffman, our guest, milesfranklin.com. You can buy physical precious metals right now just by calling them up or go to their website and get their phone number. You can also get Andy's blog, subscribe to their free email list, and please, if you are anywhere near the Denver area, please go take the time, enjoy a nice Thursday night evening on the house from Miles Franklin, and have a great conversation and probably meet a lot of other good, like-minded people who are also concerned about the economy and might come up with a lot of questions that you haven't thought of. It's a must-go-to dinner. Honestly, I wish I was much closer to them, and I hope they do one near my house. Andy Hoffman of Miles Franklin, thank you so much for your time, sir.
Always a pleasure. Thank you, Daniel.